Do you want me on the stream with you, like, in the beginning till you get going? Or, I mean, how do you want to do that?
We're live right now. It doesn't matter. It's up to you, bro. It is up to you. Hey, everyone. We're starting early today. Oh, I just realized that the stretch that I heard was my own voice. Get rid of that. How's it going, everyone? Happy Wednesday. Let me know how you're doing in the chat. Let me know how you're feeling. We're still in the pre-market, so we get to hang out, talk about setups before the market opens. I have an ad for Warrior Trading. We can't control that, I don't think. I think when you do ads on YouTube or any Google platform, you can select which account to target. So if Benzinga wanted to do ads on CNBC viewers, we'd be able to just say play our ad on CNBC videos. And as long as you pay enough, you show up. Good morning, good morning, good morning. Wagner, Lucy, Scott, Dylan. Yeah, also it can target Julie by audience ads based on like if you just say similar audience, it's probably if you're interested in watching stock market videos, stock market news, education, that type of stuff. I'll make it show up. The market is leaking. Oh no. Yeah, give me a 1 in chat if you have a portion of your portfolio that is long-term holdings that you're just not looking at right now. That's me. We do need a 300%. I'm out here looking for that 300%. 300 to 400% is my most desirable trade. I try to get one of those at least twice a day. So yeah, if you guys know the next stock that's about to explode, even 1,000% is fine. I'd love to know about it before it happens. Just DM me at Neil's Tweets on Twitter. Yeah, I took a look this morning at my longer term holdings and just said, no, let them do their thing. I still believe in them. What do I think about retirement today, Lucy? I'd love to retire today. I don't have enough money to do it, though, I don't think. Or is that like a magazine for retirees? Retirement Today keeps you up to date on all the activities you can do. Spencer said I'm not the boss. I mean, he is the coach. I'm just a player. It's Coach Spencer, guys. Yeah, guys, I'm way too young to be thinking about retirement. Not even, that's so far away. I'm not even thinking about that. Do I live trade? I want to. I was talking to Ryan Faluna about the right brokerage to use. Right now, I don't want to use my brokerage for live trading because the desktop app sucks. Y'all know what I'm talking about. So I would like to get a platform that allows me to do what I want to do. I like to trade crypto on the same platform that I'm trading my stocks. Truly true, never too young to start thinking about retirement. That's why I've invested very heavily in my 401k. Very aggressive on that. I'm not into spending money. I'm into investing money. What was I talking about before that? I forgot. Guys, we do have a goal today, 250 likes. 250 likes. If we get to that, 250 likes, folks, the first person that comments shouting, "We got 250 likes!" exclamation, will get that year of Benzinga Pro. What happened to 5.9? Good question. Let me share my screen. So this is all pre-show stuff. So we're just hanging out, guys. Thanks for the like, Michelle. Thank you very much. So let's look at 5.9. What happened to 5.9 is that it had a failed breakout. So a lot of the stocks that we talk about on the show, I'm doing mostly stocks that have breakout patterns because I think that's easier to talk about. I think that's easier to talk about individual stocks and individual picks that way. So you could consider this mode of trading that we've been talking about for the most part, breakout trading. Like they were looking for breakout trades. Now here's the thing with breakouts. What characterizes a breakout is that it has a key resistance level that the price keeps trying to get past. And then we look for technical indicators that it's probably about to pass through that resistance. And when it does, it usually has potential to quickly grow after that. It's not just like a little tiny marginal breakthrough. It's called a breakout because it sort of explodes past resistance. I like to talk about them because it's easier to kind of be discreet with the stocks and have a pick every day. But the thing with breakouts, guys, is you can have failed breakouts. In fact, our guest that we'll have on later today, I'm pretty sure I was speaking with him at one of our boot camps and he had a cool little trick for these. But when there's a failed breakout, which you see here with 5.9, you can see that the wick here, the wick made it above our resistance line, and then we've got this bearish, like inverted hammer. I'm actually not sure what you call this, but it's a very bearish candle. At any rate, it's a failed breakout. It came back down. It's actually stopped at the support line that I drew, which is this previous high. This is the pivot point that brought us into a cup and handle pattern for 5.9. So it stopped, the body stopped there. So that means there is light if you believe in 5.9's growth, which I personally do. But this particular breakout has most likely lost steam. Failed breakouts usually turn into big downward movements. Usually that means more than half of the time. Right here, we see that it held at support. That's why I've left this line up here. But what you kind of look to happen with a breakout, I mean, it's 50-50. It's either going to go up to your target or it's going to go the opposite direction. So you're looking for something like this. I don't know why the arrow is all squiggly. But you're either looking for something like that and then reaching our target. So more like blue, where's my arrow? Blue. That's the sound a stock makes if you listen closely. Or it will break out above the resistance, and then if it fails to continue, you get a breakdown. Breakdown's not the actual term. You can feel free to call me out on that. Breakdown means something else, but I think you guys get the gist. Usually you're looking for something like blah, 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 right? Pretty proportionate to what we would have hoped for. Yeah, so we see in chat here angiomon sounds like either like a medieval period leader of some sort or a Pokemon. Cool name. Failed breakouts are like trying to catch the flying sword, falling knife. People kind of say that. No, if a knife is falling, you don't want to catch it. There are people that love that, like Nick Shaheen. Is all about falling knives because he has an option strategy for that, but that's not what we're doing here. Anyways, what I want to talk about though on the point of 5.9 is it's a failed breakout. It broke above resistance and then lost steam. Like look at our candle is red. We didn't get the strong green candle showing that the buyers were coming in. We got the opposite. We got the opposite on that. So when that happens, a strategy is that knowing that there are a bunch of yokels like me that were aiming for a 235 price target, and that in the short term, it's very unlikely that that price target is going to be hit because we have a failed breakout, is selling calls to the people that believed we would hit that price target. So yeah, you can buy puts on the way down, and then the other one is selling calls, which are both bearish option strategies. I like the selling calls thing because there are so many buyers at that point because everyone sees the pattern, right? Everyone sees the pattern for that. Hey, shout out Austin for getting the Get Technical mug. Very nice. Very nice. And FYI, guys, there's a new edition that's got the rats with the cheese on the bottom. Well, Michelle, you're in luck. Michelle says she wishes she understood calls and puts better. Today, we're having an options trader on, and he's awesome. He's very good at explaining it. In fact, the last time I talked to him, he gave me a few nuggets that I've been using, and I've mentioned a few of them on the show. So make sure that you stick around for the guest lesson, which will be in about 40 minutes here. Hey, Luke, you're not allowed in here. I'm going to give you a moment. I'm going to put you in timeout. I just put Luke in timeout. One thing I want to remind guys. So you guys know, let me show you my ETF holdings. This is my ETFs. Yes, we're in a rotation right now, out of tech and into predominantly commodities. These are the ETFs that match my beliefs of what's happening in the world. And these are the future fangs that I believe are going to be massive. Yeah, love Luke, but come on, he's a knucklehead. We don't have knuckleheads in here. So I'm a huge Cathie Wood fan, and I gotta say, I am elated that we are going to have Cathie Wood here at Benzinga doing a live interview with Uncle Raz. Uncle Raz is going to be talking with Cathie Wood. And actually, Aaron, I'm not sure if you have the link for it. If you do, that would be sick to drop the link. You can register now to ask Cathie Wood a question in a live town hall format. Like now I can't think of a better time to do that. So that's the YouTube link, Aaron. Let me get the registration link. I got it. One sec, guys. I want you guys all to register for this, to ask Cathie Wood a question so we can have sort of an interactive interview thing. It's a great opportunity. I mean, Cathie Wood is going to be in the history book. She's like the most recent absolute rock star fund manager. Yeah, make sure you guys click that link and register. Enter your question. So if you click that link, it will ask you to register and enter your question that you'd like to ask. And then we're going to do a drawing. And of course, we're going to vet the questions. If we do a drawing and we get some like ratchet, ridiculous, offensive question, we're not going to choose that one. But yeah. So the queen is in the house at 2 a.m. 2 p.m. Gherkin. We're not on this is 12-hour time here in the States, 2 p.m. Yeah, still not understanding selling calls or puts or cover calls. Yeah. We'll talk about that today. Keep your questions ready. Our guest is going to be fantastic for exactly that. No, you're good, Gherkin. You're good. Alles klar. Okay, so change your settings to 1080H. Yeah, guys, if I look blurry, it's your YouTube settings. So do the little gear on the bottom right of your YouTube, and change your settings to 1080. All good, Gherkin. Kommst du aus Deutschland? Little German for you guys. All right, guys, give me some tickers if you want to look at it. Ooh. Austin wants me to wear a rat costume. Dude, I have a full-time job. After this show, I go and I have people that I need to have some degree of professional respect for me. I can't wait. I can't wear a rat suit, guys. That's ridiculous. I mean, we'd have to get to like, I don't know, like 600 or 700 likes on this video for that to happen. It would take so many likes. I guess if we get to 600 likes on the video, I could open up Amazon.com and I could let you guys pick out the costume and I'll buy it and I'll wear it. You know, but I have people I need to work with. Okay, so let's look at KMPH. We're going to start in 5 minutes and we're going to get to the normal schedule. But right now, this is just free form. Just do whatever the heck you guys want. I'm going to adjust my screen a bit. Yeah, Schmecken, what is that? Schmecken ZD like. Yeah, smash the like, guys. KMPH. Ooh, KMPH. What are you wearing? That was creepy, right? I shouldn't talk about stocks like that. I should never talk about stocks like that. Oof. Look at the last time we had a little rounding bottom action. Oh, look at these gaps. All right, KMPH, not sure of the fundamentals on this one. Clinical stage study pharmaceutical company who engages the discovery and development of proprietary prodrugs, the treatment of serious medical conditions. Attention. Okay, so we got some ADHD, central nervous system disorders. Okay, whatever. Fundamentals, yuck. This is definitely a rounding bottom. It looks like we had somewhat of a failed breakup, but maybe we bring up our target to something like this. What we can do here is use this spike. Draw it across. Earnings hopefully is a big catalyst to bring more buyers in. Let's see what MACD is telling us. I got this little MACD thing to let me know. All right, so right now, while we're in this rounding bottom for KMPH, I'm pulling up MACD, which again is an indicator of momentum. It's using it's a formula that I don't know, but it's basically a fast moving average and a slower moving average. And when the fast moving average crosses above the slower one, that means that you're looking at a potential uptrend in the stock. So right now, I'm just using this little marker. We can see that we had a cross right about here, which was January 26th. So we are right now, and then which was followed by a little bit of an uptick, just like a really minor impulse, a really tiny impulse, and then a period of consolidation. Not quite it's somewhat of a corrective down pattern. I think this one, depending on how you're trading this thing, whoever mentioned this one, depending on how you're trading this thing, you can have a lot of fun with this in the meantime. You know me, I like to look at like longer term rounding bottoms. So my immediate instinct is to look at something like this and then want this stock to get up to this so I can, or get up to this line. So I can have, tell me if I'm talking too fast. So I can have some big upward explosive potential for my options. But I mean, this is one you can trade. Like this is one you can probably day trade. Do you want to look at this from a day trading perspective? This just got FDA approval. Okay, good. Good. All right, we've got positive catalysts. We like to see that with these pharmaceutical stocks because so many of them are bullshit companies. 2 minutes until we do the intro video, just so you guys know. Viv's pick. Okay, awesome. So I mean, Viv knows these companies through and through. I'm purely just the technical guy. But what I would say is the volatility and the shapes that I see in the stock right now create all types of opportunities for trading consistently. You can swing trade this, day trade it. Looking at it from a day trading perspective, which I don't normally do on this show, but I'm going to look at it now. Actually not great for the 5 minute chart here. I don't know. Let me stretch this baby out. We're in a whole new period here. And then I'm going to pull up VWAP, which is only really used for day trading. Give me a 1 in chat if you guys want to learn more about VWAP and day trading. Let me know. Everything I do is swing. Did we get 250 likes? Can someone confirm? Aaron, did the video get 250 likes? I can't see in the OBS that we use. Okay, so that's a 1. That's a 1 for you guys want to learn more about day trading. We'll do that. And we didn't get to 250 likes. Thank you, Cameron. Wait, 220 likes? Oh, 220. Okay, so yeah, so we got to get to 250. The video hasn't even started. Hey, Aaron, can you roll the intro? I don't know how to do it. You know what? Let me try. I'm going to try to do it. I'm grown up.
3, 2, 1.
Here we go.
Welcome into the open where we get technical. You should have investments in long-term growth.
Good morning and welcome to Get Technical. I'm your host, Neil Hamilton, now accompanied by Aaron Bree. Because Spencer was offended by the bikini thing, he felt like he was being objectified, which is understandable. I get it. Some people like to be objectified. I don't know anyone like that. But Spencer, not so much. So right now we have Aaron Bree as our trusty producer and zany sidekick, if you will. Aaron Bree, say hello.
What's up, team? What's up, Zinger Nation? Happy to be here.
All right, back in your box. All right, that's Aaron Bree, guys. Again, this show is for educational and entertainment purposes only. This is not financial advice. Thank you all for tuning in. And if you're watching on YouTube, the recording on YouTube, make sure to drop a comment and let us know what you would like to learn. Drop us a like and hit subscribe. And the people watching, if we hit to 250 likes during this video, we're giving away a year. Okay, we hit it. All right, so I'm going to have to go back. Aaron, help me with this. We're going to have to go back and look for the 250 likes, the first person that called it out, to give away a year of Benzinga Pro. And now, here's what I'll tell you, because you guys are too damn good at what you do, I'm raising the bar a little bit. 500 likes gets a full subscription to Benzinga Pro, the best damn stock market research tool on the planet, with the screener and the movers tool, the news feed that you can filter the news. You can screen the news on Benzinga Pro. All right, guys, we got the charting. We got everything. Neil, there was a question in chat about a rudimentary explanation of writing covered calls. I'm not your guy for that. I do single leg, very simple calls. So we will keep that question in mind and ask our guest, who's a lot smarter than me, a lot more experience than me, and has a much bigger beard than I can grow. So he will be here, guys. Oh yes. So I want to get into our first stock. So right away, we are hunting a rare, powerful pattern today. We are looking for, perhaps, dare I say it, and this will only appeal. I think this is going to split the audience right down the middle. This is the Charizard or the Mewtwo of stock chart patterns. We're going to find that, and we're going to go to my pick of the day, and then we're going to go into that guest lesson with Brad from Trading Grounds. He is your man to ask about options. Okay. I have Gandalf coming on as a guest. Yeah, we've been asking him, but he likes to kind of come and go like every 100 or so years. So you never really know when he's going to show up. I left a note in Bree, actually. And hopefully the innkeeper there delivers it. He's not very great with delivering messages. Anyways, Lord of the Rings, guys. All right, so rare. We got rare, triple star rarity patterns here. By the way, if this video gets to 500 likes, two things will happen. The person that comments live, because you're watching live, will get an annual subscription to Benzinga Pro for free. The next thing that will happen is I will go to Amazon.com. I will search for rat suit, and I will let chat pick out the rat suit that I will wear on a Friday. You only need to. I feel like 500 is not enough. Only 200. We're at 300 already. Can we raise it? I feel like, hey guys, you ever set a goal for yourself and you just know you can do so much better? Like whether you're losing weight or it's like a training goal, you know you can just do so much better. And you know that probably the best thing to do is just move that goalpost. Don't you feel like we should do that for the rat suit? Maybe we make the rat suit 800. Let's a cool 800. I think we'll do 800 for the rat suit. All right. Let's talk about stocks, because I don't want you to miss this one. KMPH is halted
Someone in chat just dropped that KMPH is halted. That's the biotech stock that Vivi mentioned on the Biotech Pulse. Great show that you got to tune into. Benzinga only, Benzinga live stream. We are talking about rare Charizard patterns today. All right. The high tight flag. All right. This pattern is a beast. Why? Because it has upside potential of about 100%. About 100%. Can one of you guys call my broker and tell him to buy some KMPH while I'm doing this? That would be great. That would be extremely helpful. I love you guys. High tight flag. The stock that I'm looking at right now is NMMM. It is already broken out. I bought calls on it. I bought shares of it, and it's going. All right, so we're looking at the weekly right now. Why am I looking at the weekly? The weekly I don't normally look at, but guys, get your eyeballs. You got KMPH, you got NMM to look at this morning. NMM not halted. All right, KMPH lovers can still be traded. What we look at in a high tight flag is basically a pull that's 100% growth, and then a corrective phase that's trading sideways where it doesn't sell off after 100%. Why is that special? Because usually after a stock shoots up 100%, that means that institutional buyers bought a buttload of it, and then they're going to take their profit at that point, and then usually it rebounds back down. That's why folks like Luke Jacoby, he learned his lesson on this. He actually got burnt. But when he sees a stock go up like 100% or something, like really quickly, especially if it's got gaps, he will sometimes if I'm not mistaken, I believe that he will buy puts on it. At any rate, this is NMM. Neil Mama. Neil Mama. Okay. That we're looking at, and you should be able to see it kind of in the background here. All right, so I'm using the weekly because we want to see a 100% move up over 4 to 8 weeks, which we have. I already counted it for you, all right? I'm not going to do it again. All right, and then it corrects sideways, meaning we get up on this pole, get up on that pole, make that money, and then we have a pivot point right here, and then it starts to move sideways instead of straight up, right? For 3 to 5 weeks. And what do we got here, folks? We are looking at the weekly. We got 3 weeks. Okay. Volume declining during this period. Yes. All right. Why is this happening? What is the psychology behind this pattern that we're talking about? The high and tight flag. The psychology is that institutional money, the big money that really moves stocks, bought a ton of it, and then decided they didn't want to sell off. They still want to keep it. So when it's trading sideways like this and consolidating, it's highly likely they're going to buy up more. They're still accumulating, right? That's the technical term. We're in a strong accumulation phase. So looking at this pattern on the weeklies, we can see it meets the first 2 criteria: 100% move over 4 to 8 weeks, and then a correct sideways for 3 to 5. It's 3, arguably 4, depending on what you consider the pivot on the pattern. All right. So I've drawn a box on this, which is going to make more sense when I go to the daily. That's a flag, baby. That's just a plain old bullish flag, rectangular apple pie flag. We love it. Why? Because it makes it very, very clear where the breakout point should be with a solid horizontal resistance, as opposed to a sloping resistance, which makes it harder to say what is the breakout point. And then when we're looking at this, I'm distracted. Jeremy, only 3.37% are held by institutions. I'm not sure if I believe that completely. That's probably coming from 13F filings, which are only every quarter, right? So that might change when we see the next 13F filings. And I'm assuming you're using whale wisdom. Good drop, though. Thank you, Jeremy, for the information. I would be very interested to see what whale wisdom says at the next filing period. At any rate, looking at this thing, we're still a high and tight flag, guys. Still a high and tight flag, and it's going. Look at this next candle. Right now, we've got the dailies. We are opening up high midway through the top of the wick on this stock, and it's strong. We're looking green, which is fantastic on a generally, let me just look at my ETF holdings, red day, all right? We've got some strong divergence on this. This is NMM. This is a shipping Shipping stock. All right. High type flag. Let's talk about price target, guys. Actually, first, the price target is the best thing to talk about. Price target, as always, guys, when we got the flag, is the height of the pole added to the breakout point. Holy cannoli. Let's get our little ruler. God dang. God dang. Should we wait to see earnings? Here's my belief on earnings. If you're setting a stop loss properly, which I'm going to tell you how to set a stop loss for this, earnings should not be a major distraction for you, because the primary thing that you're looking at is what's in the chart. And what I'm going to add to that is that we've talked about this before. The people that are researching these stocks, the institutional money that's in these stocks, there's a team of people at a bunch of different firms that are dedicated to understanding this sector and this particular company. They pay analysts to research the management of the company, to research the entire market, to understand how this company is doing, to the point where they know as well, if not better, the outlook for the organization than the company does itself. So when we talk about earnings, that is another thing that's happening outside of the price pattern that's baked into the price. That's baked into the chart. That's what technical analysis assumes. The first basic assumption of technical analysis is that the market has all of this information baked into their buying and selling decisions, and that manifests as patterns in price behavior on a chart. All right. So yes, this is one hell of a pull. So buy point is the high point of the flag, which is the top of this little white rectangle that I've drawn for you. And let me, here, we'll do this. Maybe this will help out a little bit. Which right here is about $18 or $18.99 plus 10 cents, right? So we're looking at something more like $19 and some change. All right. Not bad, but it's already broken out, guys. It's already broken out. So I bought yesterday at close when it had already broken out. Why? Because high type flags have so much potential to go. The target sell, the first target price is 50% of the pull, or the first target sale is 50% of the pull. So I can eyeball this pretty easily and just draw a horizontal line halfway down here. Around $25 is our conservative price target for this thing to go. And it's looking like a ripper. Then the aggressive price target is the top of the pull, which is about $31 bucks. All right. Rare pattern, very rare pattern. Watch for it. When stocks rip, and look at this one ripping off what looks like a double bottom. All right. When stocks rip, watch for a high tight consolidation using our weekly charts. Okay. So it all starts with weekly. If it occurred over the course of 4 to 8 weeks and it was a 100% minimum move, you might be looking at a high tight flag. And then the stop loss, there's two ways. So I did some research on this before the show this morning. I looked at a bunch of different, basically authors' takes on it. And there's a couple ways of looking at it. A very simple one is just a stop loss of 7 or 8% less than where you entered at. That's pretty consistent across any type of trade. Any type of breakout trade, folks will say 7 or 8%. But another way, that which I don't have here. Wait, why didn't I have this here? I must have forgotten to type it. But another one is just previous price support, guys. Just look at the chart. It's a percentage thing, doesn't apply in every situation. We're just looking at previous support. So we can see that we found support right here. So if I draw a line, we can see that support was found right about here, which lines up not too bad with the body of this candle and the lower body of this candle. So I would say a stop loss of about 1677 is not bad, but it's already up, guys. So I mean, with it already being up, my stop loss will be raised. As with all of these, raise your stop loss as you go, as you ride it up, and just use previous support as your stop loss. Does that make sense? Does that make sense? Well, who put that up on screen? Hit the like to help us get him into a rat. Guys, we need like, guys, you guys are crazy. We need like 800 likes to get me to wear a rat suit. I don't think it's possible. All right. Yeah. All right. So that's your high type flag, guys. NMM. All right. Let me exit out full screen here. We've got 15 minutes until our guest comes on. I'm making good time because I started the show early. Yeah, I had ship previously. Back, man. Yeah, this one kind of looks like it's in no trade territory. God, what the heck? Just gonna refresh the page. Yeah, I mentioned ship because shipping stocks were doing stuff that I liked. Oh no, I think we have system failure. Let's go to trusty old Bitcoin and see if it loads. Okay, stop share. Reload. My charts are freaking out, guys. Should be able to switch to Benzinga Pro. To full featured chart. Oh my Lanta. Charts are down. We're trying Pro. We're trying Pro. Mm. All right, I got Pro open. Hopefully the charts are working. God, I really hope this isn't like Amazon servers are down or something like that. And it takes down like every web service. Okay, give me a 1 in chat if you guys can see my screen. So I was looking at ticker SHIP, SHIP. It was mentioned previously on the show. Opening it in Benzinga Pro here. You guys should be able to see it. We open up our charting tool. Hey, it's working here. That's super weird. So the charting tool in Benzinga Pro is powered by, yes, the suits, is powered by TradingView. So it's weird that this happened. So right where ship is right now, just looking at it for my own trading style, it's in kind of no trade zone. But I think if you wanted to look at it on a shorter time frame, you might see something. Let's just look at this, and looks like it's got a nice consistent sideways channel. Usually that's very tradable. So what I'm going to add to this is VWAP. So what can be done here? As you can see, the VWAP is going sideways through this channel. VWAP can be used as a midpoint that you are looking for crosses and touches upon. And something that can be added to this as well. Let me just see what the old Bollinger does. Different technical indicators work better on different stocks. That's something you guys should know. You're going to find stocks that work very well with the VWAP, and that's why some traders will just stick to like 1 or 2 stocks, because they know that they behave the way they like them to behave with the technical indicators they're comfortable with. Crypto morning show. You guys always want me to do so many things with my charts. Yeah, I might be able to turn the watermark on. Actually, I'm not sure if I can do that in Pro. That maybe it's here. Yeah. Your last name, symbol, last name. Boom. Okay, so now you can see the stock. Good call. Good call. So what you can look for here, just using the VWAP, I'm going to turn off the Bollinger Bands, is for crosses above, below, and bounces for trading opportunities on the stock. I'm not going to go into much more detail than that because I don't really trade on a minute chart. I don't have time to because I have a full-time job that I'm more focused on. But if I look at this on the daily chart and crunch it back down, I'm not seeing anything that gives me much confidence in this besides this gap to fill. So if you see a surge in momentum, either in your RSI, which I can pull up actually. Yeah, if we see RSI start trending up, you can look for this gap to get closed. That's a small thing. Aaron in chat. Let's make sure everyone else can see that too, because I think he meant to put it in private chat with me. But there you go. So I'm running the show. I'm the captain now. Any other stocks you want to look at? Let me try. I want to try TradingView again really quick while you guys are catching up with me. Yeah, ship earnings are the 16th. Okay, let's try blah, 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 NMM chart. Hey, we're back. We are back. Let's switch our share settings. Okay. Oracle, because you said it 4 times, and then we'll also look at Rocket. Boom. Boom. Rocket. All right, you guys all right, let me know. Can someone let me know, why did Rocket up like this? What factors contributed to this massive green candle that we see on this chart? There's one answer I'm looking for in particular, and it's pretty mainstream what it is. Yeah. It became the most mentioned ticker on Wall Street bets, passing GameStop. In combination with, correct, Garrican, correct, Keith, in combination with a bunch of shorts positions on the stock getting squeezed. So they had to buy to cover their position. So all that big money came in. They got raided. This is a GameStop story. So when something like that happens, I don't know. We got a big candle here, and then we don't have like a really definitive candle right here. I do think that Rocket has a good story, which is they take the shitty aspects of things that you do with your money and make them easy. Like a lot of, when you talk about fintech or financial technology, a lot of the successful companies right now are going over, they're handling like pretty like everyday tasks is what I would say is the go-to-market strategy with those, or like the product development strategy. What are things that people do with their money every single day that we can make easier with technology? I think Rocket says, what are the things that people absolutely hate to do with their money, either because there's a low level of understanding on how to do them, or because they're daunting and labor intensive, and how can we make that easier with technology? So I think they're unique in that regard. So there's a good story there. That was enough of the fundamentals for me. Yuck. Here, I don't know. Do you, I mean, it's not holding meaningful support. And Brett, I know you're here. I'd be interested in what you have to say about this, but I know that, I don't know if this is your type of stock. I would say, since it's broken through this support level, you can probably get away with a put, but I think it's going to be super expensive because there's already so much volatility with this candle that the puts are going to be very expensive to buy. Bounce off 32. Why are you saying 32? 31? Is that what you mean? Bounce off 31? Possibly. I mean, that's the next line of support that we would be looking for Rocket to hold. So you don't know if it's going to do. Here's the tough part. We know that is a support level that we want it to hold, and we're not going to know if it's anything meaningful until it actually touches it and then starts bouncing. Oh, I'm not sharing. I thought I was sharing my screen. Oh shit, guys. Yeah, so this is again Aaron is in the bathroom. So guys, with this stock, this is Rock. I'm just gonna go over this quickly and then we're gonna start I know you guys can see my screen. I got it now. We had a very big green candle that was driven by a phenomenon called a short squeeze, which is an outside event. And then it was followed by a bit of a sell-off today. All right. And then that sell-off, that red candle on the daily chart, we're looking at daily frequency, passed down what should have been support because it was previous resistance. Now should be support. It went past it. And the question is, can I go short on this stock now? You may buy puts, but because this candle is so big and voracious, it's going to be expensive because there's so much volatility already baked into the cost of a put. And then the next line of support is going to be about 31. All right. Sorry about the screen share thing. All right. What other stocks do you want to look at? We got 4 minutes before we bring on Brad from trading. Why I like In the Money Trading. He's got ITM Trading. Why do you have so many names? Trading Grounds and In the Money Trading. You might know him by either one. Great options trader. And I every time I've heard from him or spoken to him, I've ripped off his ideas and used them like they're my own. Is saying Fibonacci relevant to anything currently going on? I mean, Austin, I just like to say Fibonacci to sound smart. Honestly, I throw it out in combinations. I just say Fibonacci extension in conversations that have absolutely nothing to do with the stock market. But let's go ahead and let's apply the Fibonacci retracement. So what we have is a move up. I'll move it to 4 hours so you can see more steps here. We have a move up and then we have a retracement back down. So we use our Fibonacci retracement tool to get an idea of the meaningful levels there. I'll go ahead and draw from the low point of this trend, which will be the bottom of this candle or the open of this green candle, to the high point. And we can see that the retracement is just about at the 50% line in the Fibonacci retracement. Does that mean anything? I don't know. It's nice. It's very nice when the retracement lines up with actual price levels, which it kind of is here with the body of this previous all-time high. But we see that the stock, as we're talking right now, the stock is still going down past that. So we'd be looking for something around the 61.8% on the retracement. And whether or not that's meaningful, we'll see. That is around previous, like the next line of support. All right. So take OCGN now or you will regret it. Is that a threat? OCGN. The name sounds like a stock that you sound cool talking about. Ooh. I see what you're doing here. This is a tough one. So here's when I do stocks, when I do entries, I like to see my consolidation follow like that. I don't like to see it follow like this. Does that make sense? Because that gives me an upper line of resistance that I don't know anything about. I'm a swing trader. Whoop. That darn paintbrush tool. Yeah, if they got vaccine approval and this is all they're moving on, I mean, we still have some levels we have to break out from. This level matters, kind of. This is the most important one. So it could go. I just don't know what levels it'll go to. cruise line, airline, hotel, etc. with Texas opening, 100% of other states following suit. Reopening stocks. The reopening stocks don't seem to have gas. I'm going to tell you that right now. A lot of the ones that you typically think about, like we do like RCL, the cruise ships, not like a tremendous amount of gas, although there might be something forming here that, I mean, I would like to see it on the daily. Yeah, I mean, I don't see like a clear entry on this. Maybe I would if I would look at it over a longer period of time, but I don't have time to because our guest is here. Ooh, actually, gap to fill there. Rounding bottom. All right. Maybe this is a rat snack. Maybe we'll come back to this. All right, guys, make sure that we get reopening stocks are just as overvalued. That's what the word on the street is. Guys, we're getting this video to 500 likes for a free annual subscription to Benzinga Pro. I don't know if we've already gotten there. But if we get there, the first person to shout 500 likes in chat gets that annual subscription for free. And then 800 likes for the cosplay thing. You guys want me to dress up like a furry, whatever. You guys are sick. Actually, I'm not kink shaming furries. For the furries in chat, you are welcome here, and we are a tolerant group. I fully accept you for who you are and what you like to do. I just don't do it. But 800 likes. We go on Amazon, go shopping. You guys pick out the rat suit. I'll buy it. I'll wear it. All right, guys. It is 10:01. I think Aaron Bree is back from the potty. It is now time to bring on our guest for our guest lesson of the day, Brad from Trading Grounds. Yeah, buddy. There you go.
So Aaron called me at like 9 o'clock last night, and when he told me that I was going to be on the show with you, I didn't even sleep last night. I was so excited.
Really?
Yeah, I was genuinely excited to be on the show.
Wow, I'm really flattered because I'm a huge fan. And I don't know if you caught this, Brad, but I think the last time that we had a conversation was at the boot camp.
Yeah.
And your breakdown of how you trade options I've literally written it down and made it part of my system for trying out. So for folks watching the show, a lot of the times, at least over the past, I would say, week of episodes, when I've talked about potential options plays, much of that, I'm not going to say all because some has come from a couple other educators, but much of that has come straight from this man. So we have a good lesson. And what I like, Brad, about the way that you've explained things is that you're able to adapt them to different trader types. So you're like, okay, if you want to look at a shorter time frame, do this. You want to look at a longer time frame, do this. But you're also able to break it down into steps, which I think is absolutely essential for folks because there's so much out there. We were getting questions in chat earlier, which I'm hoping you can answer, particularly about basically anything but single leg options. So it's like what is a cover call? When is a good time to use it, and so forth. And I said just wait until Brad gets here. So
I would love to talk about that.
Okay.
Yeah.
Cool.
No, I appreciate the kind words. I kind of so we deal with in our Discord, we deal with a lot of there's a lot of us that are, we've been trading for a while, but a lot of the traders that we work with are newer, and a lot of the people that we're kind of mentoring and working with are new to options specifically. And so I remember, like, when I first started trading, there were so many people that sort of took me under their wing and helped me out and stuff like that. So my goal with trading obviously is, support my family and take care of that. But I want people to understand trading from a personal perspective and like kind of get it. Like when it clicks for people, that's what really makes me excited. So I just try to work on that every day to help people out. So I appreciate you saying that.
Wonderful. Well, this is the spot for it. So the format of this show is everyone just listens to me be a silly child man for 30 minutes, and then we bring on a guest educator. And so the folks are here to learn and hopefully earn while they learn.
Yeah, absolutely.
Trademark.
Hey, another thing too, I appreciate you guys having me on the day of Cathie Wood coming on too.
Hey, we got a stacked agenda for folks today. We got Brad from Trading Grounds. We got perhaps the most prolific and well-known name in fund management, and best, like, probably, dare I say, stock picker.
Yeah. Oh yeah. She the hype for her. I mean, it's funny because I was just watching, I forget who had it on, but like Bloomberg, for example, they had an article out the other day that the outflow on ARK ETFs were like a record, and that ARK was crashing and blah, blah, blah. And they were just basically kind of lighting her up a little bit. And then the next day they had an article that said record inflow on the ARK ETFs. They had like $400 and some odd million in inflow. And it's like, she is so like under the microscope that movements like that. But you know, she just, like, it's a great follow. You could learn a lot from them.
Absolutely. She puts out a lot of content too.
Yeah.
For her outlook on what's going to happen in the next 3-5 years and why she makes these picks. Guys, I just dropped in chat a link so that you guys can register for our sort of quasi town hall format live interview with Cathie Wood of ARK Invest. Don't miss it. By registering, you get the chance to ask a question live. So, I mean, even if you just get to ask, like, what's your favorite color, Cathie Wood? I mean, don't ask a stupid question like that, please. We must protect the integrity of this fine establishment, Benzinga. But I mean, the chance to have asked Cathie Wood a question is probably on the top of the list for a lot of folks in the space. So definitely sign up for that. Okay, Brad. Enough of me bloviating. I would love to know what stocks you're looking at right now. And what folks could hope to learn from you in terms of how you're trading options around those.
Yeah. So, typically I'm always playing SPY. I mention it all the time, but I think if you're going to start learning options, I think the first thing you need to learn is how to play SPY options, both, you know, calls and puts. I think it's obviously it's the gauge of the market. But I think it's the best way to get like involved with options. So I'm always playing SPY options. Right now we're big on DraftKings. That I think it's settling down right now. It's in 68, 69 range. Like now, I think it's $100 stock easily. I think it with the new contract with Dish that they just announced this morning. They killed earnings. I think as this year mobile betting sort of becomes a little bit more widespread, they already have a really good their daily fantasy app, and their that system is really good. So I think from like I'm like you, I don't do fundamentals or anything. Like I'm a technical guy, but from a fundamental perspective, I think the company is strong, and I think they're one that is really worth watching from a long-term perspective. I have played it, you know, kind of like I have it long-term portfolios, and then I day trade it. I really like DraftKings. I've mentioned it before. I play all the ARK stuff. I play NNDM is a big stock that we've been playing for a while now. It kind of has settled down a little bit, lot more than we expected. We followed it since probably June of last year. So it's been a stock I've played. I have it long term. I have it day trade. You know, I kind of do everything with that. So that's another one that I play. Skills SKLZ is another up and coming. It's a like an esports like a betting esports platform. That's another ARK play that she seems to really like. Then we have, I mean, Rocket right now is so. I would not take a position on Rocket right now. I think the high, if I'm looking at it correctly, is 48.39, and it's already down to the low 30s. And I don't think it tests it again. The thing that was interesting yesterday as I was watching was all of the options were expiring in the money for Friday, the weekly options. So that was kind of interesting. I thought maybe it would push a little bit more than that. It looked like it this morning it was gonna run, but then almost immediately it retraced, and now it's below every moving average. So I would monitor Rocket. I don't like, everybody was talking about how like everybody wants to find the next GameStop and stuff like that. And I don't think Rocket was going to do that. I think GameStop was a GameStop thing. I think, you know, we saw all the other stocks running and stuff like that, but GameStop was unique to GameStop. So I wouldn't say that Rocket is something to expected to go to like $100 a share or anything like that. More probably like of a long-term perspective, I think. UWMC is another one that's hitting the scanners. That's more of it like a day trade for me with that. What else am I playing? APPS, which is another ARC stock that I play. I've been kind of day trading that a lot too. I also have that from like a long-term perspective. And then what else am I pulled up charts to make sure I was talking about everything that I wanted to. Get my watch list. Yeah, that's probably a high level overview of what I'm kind of touching. I run I run scans all day. I have a pool of stocks that I play from consistently. But I run just numerous scans all day. Like I actually run a high tight flag like you were just talking about. I have a scan that I run for that. I have a low float momentum scanner. I have a gap up scanner that I run. I have a touch the 50 moving day average scan. So during pullbacks and stuff like that, then I kind of watch for a new high off of that. So that's a mixture of what I'm looking at from like a scans perspective.
Okay. So there you guys go. That's sort of the landscape that Brad is looking at. Brad, with one of those, maybe I think it's probably best to look at SPY.
Okay.
Based on how you like to use it as a learning tool, and I think it's a good starting point. I'm gonna let you share your screen.
Let's see. Okay, I think I got it up now.
Uh-oh, Brad, can you hear me?
Yeah, I can hear you.
I don't know. It looks like we lost Neil for a second.
Oh, okay.
Oh, we got him back.
Here he is.
The suits. Yeah, I'd love for you to share your screen, and a lot of folks, like I said, they're just asking when to use calls, what do different spreads mean, and so forth.
Yep. Okay, cool. So let me real quickly, I'll just kind of overview what my strategy is for SPY calls, SPY puts. I'll turn a couple of these off because there's a lot, and I just want to focus on the main ones. All right, so I use a 8/21 day EMA crossover for entries on SPY calls and the other way, exits. The EMA is the quicker of the moving averages. It works for me. It might not work for anybody else. I don't know why. Moving averages, for some reason, I just really like them. I have two other indicators that I use to kind of pair with it. I use a stochastic RSI, and then there's this TTM squeeze from TradingView that I absolutely love. That is another good indicator. So I'm not like, I want to see like a general uptrend in both of those indicators, but for the most part, when the 8 crosses up the 21. So like, let me zoom in right here. So this right here, this green line that's crossing up above the white, that is the 8-day crossing the 21. That would be an entry for me. And as you can see, starting here with your entry and then going over to about right here is where it would start to touch. That's a pretty good, I mean, that's a good trade right there. I also would want to see confirmation on the squeeze momentum here. This is showing a general uptrend as well. I don't really get into, so like the stochastic RSI is different than just the RSI. This is a good, like this flat line right here, even though it's above the line as we would say, it's not necessarily a automatic no buy for me. I like that this would be trending in an up direction right there. So again, to kind of cover, I use an 8/21 day EMA crossover. The green line right here is the 8-day, and then the white line is the 21-day. When the green line crosses up above the white, that's an entry for me for a call. You can also do the opposite as well if you would like to. So let's say, for example, right here, you could see that the green line has now crossed below the white. This is an entry for a put if you would like to play the opposite side. And as you can see, if you entered in at 725, well, you couldn't have entered at 725 this morning. But let's say, for example, this is later in the day. This could have been an entry for you, and you're entering at 388, and SPY is at 383 with absolutely no sign of stopping anytime soon. It's actually now about in the gap too, so it's probably on its way back down to. I mean, it's going to get down pretty low today. So you could enter in on that moving average, and it would be a pretty good trade for you. That's what I like to do. I like to play the moving averages again, and I also have a couple more that I turn on as well. I know this to a lot of people, you're going to say, "Oh my gosh, that's way too many moving averages." I like moving averages. I don't use like I've never really been able to get into like using the RSI, using the MACD, and using stuff like that. When I first started to develop a strategy, the strategy I was using was moving averages. I've tested it. I've watched numerous stocks respond well to the moving averages. I feel confident enough that that's the strategy that I use on a daily basis. So I throw a couple more on. I think always having the 200 moving average is also a good indicator as well. And I also throw a 50 and a 30 moving average, just a regular moving average on there as well. And I use my entries on the 5-minute chart. That was another thing that I forgot to mention. I trade from a 5-minute, and then I also use the 1-hour chart as well. So that's a basic kind of overview of what my entries and exits look like as far as when I'm day trading. Oh, another thing too, let me say this. I only day trade. I very, very, very rarely hold a call overnight, especially weekly calls, because of the way that they decay overnight. You know, a lot of times, and I've made the mistake before, you know, I've had a call and it's late in the day and I think, oh man, SPY is ripping right now. And then it gaps down in the morning and it just absolutely kills the contract. So I don't like to hold contracts overnight. The only contracts that I will hold overnight are monthly contracts, and that's separate than SPY. I typically only play weekly SPY calls. I don't really focus on the monthlies as well, because my goal with SPY contracts is just simply flipping for premium back and forth.
Okay, so you just answered a question that was in chat, which is how far out do you buy your options? So we're talking weeklies.
Weekly, yeah. So like yesterday and Monday, I was playing Friday expiration. I typically don't play, like if it's a Monday, I typically don't play the Wednesday. Sometimes I will. I don't play the same day. I like to play the Friday expiration weeklies, depending on how things are going and stuff like that. That's the ones I normally do. And then if for like another perspective, if you're just trying to get into options and you're trying to like find like if you're just trying to find what sort of area you should fit into, look for like a 30 to 45 day expiration. That'll give you a little bit of a, you're not going to automatically lose because you're decaying rapidly. And it's going to give you a little bit of a time to where it's like you can buy a contract for $1 and then the next day it's not going to be 20 cents. It's going to give you a little bit of a time to build up on it. So 30 to 45 days is probably the sweet spot.
Okay. Oh, and then this is a good question. So if you're buying Friday expirations, say it's Friday, do you buy the next Friday out or are you buying the same day?
If I'm doing in that scenario, I'd buy the same day. I wouldn't play a next week before the weekend. I would only play the same. I don't like doing things even like with commons and stuff like that. Unless I'm doing something long term, I really don't like holding stuff through the weekend, especially right now, because like for example, like Monday, we were on our way to 400. I was really convinced that SPY was going to 400. Yeah. And then Tuesday morning we woke up and it was like, wait a minute, what happened? Like there was nothing that happened from like a catalyst perspective that made me think, okay, this is why we started to drop. I was really convinced. But stuff like that happens over the weekend all the time. I don't like, I just like my hands are tied and I can't do anything until Monday at 9:30. So it's like, if I'm playing a Friday call, it's that same week. And if I'm entering in on a Friday, it's that same Friday. I won't play. I won't play like the next week because of the weekend.
Got it. So guys, there's another question about another sort of moving average, not strictly, but I think he's got so many lines. I'd be surprised if he uses it, but Brad, VWAP.
Yeah, I know what the VWAP is. Again, I don't have it on any of my charts. That's not to say that I have I don't have a problem with it. It's not like I'm against the VWAP. It's just when I started to develop a strategy, it was just something that I never incorporated. And so I'm at the point now to where I'm a tinkerer. Like with everything that I do, I'm always changing, I'm always moving stuff around. But with trading, that's one area that I'm trying not to do. Like I have to resist the urge to on the weekends, like run back tests if I add the VWAP. Like say, for example, if it's Saturday afternoon and I'm running back tests and I want to add the VWAP and I think, okay, well, I'm going to add that as another indicator. Maybe that'll confirm. I don't want to have to do all of that. Now, if I start getting into now here's an example, like last year when we had the COVID stocks that were running and stuff like that, you were simply playing hype. Like you weren't like waiting for, I was getting up at 4 a.m. I was playing a stock and then I was out at 4:07 a.m. because the way that these things were moving, it was just insane. So I wasn't waiting for like a moving average signal or stuff like that. So right now, the moving average stuff is working for me. If I hit a week period where I'm just like, my signals are off, I'm not making any profits, I'm making bad trades. If that doesn't work, then I'm going to take a weekend and I'm going to go, all right, what do I need to change? What's not working? Maybe the VWAP would be something like that. But for me right now, it's just not on one of my charts.
And you also, you touched on, so VWAP is a no, because it's not part of your strategy, but you also touched on this mentality that people can get in, that I've been in actually in the past couple of weeks. I would say probably for a period of about 2 days, where the market is not doing what I expected it to do. And so I lost money, or even was just upset that I didn't win the money that I thought was going to be for sure. And then I get into a mindset of, I'm going to do things that are exotic to me or outside of my normal thing to try to get that money back. And that is a very dangerous place to be. So sticking to your strategy. Very good lesson.
That's just like stuff that you'll develop over time. Like when somebody will message me and they say like, I'm a new trader, can you help me out? Like, where should I start? Like, there's so many different areas where you could start. It's tough to pick one thing, but something that like I always try to teach people is like, listen, like you need to have a strategy. Like that's one of the things that we do when we have new traders that we're trying to teach and stuff like that. We're not sending out signals and buy alerts and exit alerts and stuff like that. We're saying like, hey, listen, the moving average is crossing right now. This is probably an entry for you. We want people to see why we're actually entering a stock, so they know when something happens, they're confident in it. Because the last thing that you want to do is when you enter a trade, you don't want to like hover over it and think like, oh gosh, it's dropping. I got to get out right now, or oh gosh, it's running like crazy, I got to take profits. Like you got to have something in the back of your head that like, okay, this is why I entered the trade in the first place, and I'm going to exit when this happens. So having like an actual trading plan written down and memorized is a key to being a successful trader, I think.
And while we have you here, we did get a question, and guys, a lot of these questions, yes, that you can Google them or go to Investopedia and look up the answer. But there's nothing better than having someone who actually has experience with this stuff explaining it. So also at the end of the day, some folks just don't want to read something because that's not how they learn.
Yep, great point.
So I'm going to ask a very rudimentary question based on something we got from chat of you, Brad. And it's just what is a covered call and when do you use it?
So the easiest way to describe a covered call is when you own shares. Now, there's a difference between a covered and a naked call. So let's talk about covered. A covered call is when you own the shares of a company. Let's say, for example, you owned Rocket, okay? And you owned Rocket at the beginning of the week before this big run. A covered call you would sell against these shares. It would allow you to profit during a sort of a dry season of the stock. If you are long-term on a stock and you want to have like a sort of a line of maybe credit, if you want to look at it this way, upon those stocks that you own, writing covered calls and selling covered calls allows you to do that. Now, if it's exercised or anything like that, then you give those shares away. So it don't do that as a way of like, if you don't want to lose the stocks, don't do covered calls. If you have a stock that sort of becomes stagnant and it's not really doing anything, it's not bringing any money in for you, and now all of a sudden, especially like with IV, with implied volatility, when a stock spikes and the implied volatility is super high, that means premiums on the options are going nuts. If you can get in on a covered call and sell contracts on a stock that you own before the IV goes crazy, that'll be like life-changing profit, honestly. Like if you saw the things with GameStop and stuff like that,
Yeah,
those things, when you write contracts, when you are selling contracts, you are getting that premium. And most of the time contracts are not exercised. They expire like out of the money, or they, you know, you're don't think like necessarily as soon as you write a contract, you're going to have it exercised and now you're going to be out of those shares, or you're going to have to buy those shares depending on what side you are on. But a covered call gives you the option, at least if you have a pool of stocks, like people I know, like for example, GE is a stock that like for some reason everybody has. If you've got shares of GE, write covered calls against it. If it's something that you're doing long term, use that as an option to build to bring in income. If you're long term on a stock and you want to keep the stock, put it in your portfolio and then just write covered calls on it. It's an option. I think covered calls, that's like step 3 or 4 on like the options levels. Like you want to start to learn calls and puts, and you want to start to learn buying and selling those. And then when you can kind of get into the other strategies like iron condors or butterflies or calendar spreads and stuff like that, there's like options is so much more than just buying and selling calls and puts. Yep. There's so many things you could do. And once you kind of get a grasp on like calls and puts, then start studying the other ones.
So I think that's a great note to end on. So Brad, you've given folks an idea of how you like to trade and a little bit of a preview of what goes on in the Discord. How can folks find you, and how can folks join what you're doing?
Yeah, so my website to kind of link everything is tradinggrounds.live. Trading Grounds is my, you know, like I'm a big content production guy, and so through Trading Grounds is everything that I do. I do live streams during the week. I do teaching videos. I do chart reviews and things like that through YouTube. Tradinggrounds.live is the website that you can access everything through. At the top of the webpage, there's a link to our Discord channel. Our Discord is ITM Trading. We started this about a year ago. It would have been about February of 2020. A bunch of guys were in another Discord, and then they moved over they started their own Discord. They invited me, so we've been trading together now for a year. And so it's a free community. We don't have like levels or anything like that where you get access to the general room and then you have to pay for alerts or stuff like that. Like we are literally just a group of traders that wants other people to succeed. And so you're welcome to join us. We have various channels and stuff like that. We trade together every day. But yeah, ITM Trading, you can search us on Discord, or you can go to tradinggrounds.live to access all of our content.
Yep. And that link is in the chat. I'm a lurker. Longtime lurker, perhaps a first-time contributor here today, depending on how things go. But Brad, it's been great to have you. I love the lesson. Would love to have you on again to dive into stuff.
The pleasure is mine, my friend. I am very honored every time I get a chance. And feel free to reach out anytime. I'm happy to come on.
Fantastic. All right, we will catch you hopefully very soon, perhaps the next boot camp or live on Get Technical.
You got it, buddy. Have a good day, man.
You too, brother.
See you, man. Bye.
All right, guys, that's Brad. Check out Trading Grounds Live. Great Discord. That's the real deal. He's a real one. The group of people in that Discord are real ones. They subscribe to this sort of new thing. I don't know how new this is for reach. I think that like hedge funds and institutional traders have known this forever. Which is that trading is best done in groups. It's not a one-person job. So doing these things by yourself and having to plug all of this information and input into your own brain is a lot when it's running a business, essentially. When you're talking about your money, you're running a business. So trading together, bouncing ideas and picks off each other, confirming whether you're crazy with a trade idea and something like that. Or just a few. That's a short list of the benefits of having people to trade along with. So highly recommend being in a Discord. So check those guys out. I'm in there. I'm in a bunch of other ones with the folks that you guys see on the show. I'm a dabbler. you guys know me. I like to dabble. I like to try things out. So I go in through all of them and try to derive whatever I can from them. So we're at 1 minute, guys. We're about done, guys. I'm going to drop the link to register for the Cathie Wood ARK Invest Cathie Wood live town hall format in a interview happening today at 2 p.m. Eastern time. Make sure you register and put in a question, because we are drawing 3 winners to ask their question of Cathie live. Really just a once in a lifetime opportunity to ask one of like a very historical stock picker, and frankly one of the most innovative people in the space right now. I'm a huge fan. As many of you know, most of my long-term holdings are straight from Cathie's ideas. I agree very much with her vision of the future. So check that out. I'm going to drop that link right now. So you got 2 links. You've got Trading Grounds for Brad's Discord group. Brad was our featured guest of the day, and then now you've also got that Cathie Wood registration thing. So attend that. Make sure you go, guys. Thank you so much. I hope that you guys enjoyed the show today. We did get to I forgot what the first goal was, but we got to 500 likes. So great job, guys. You guys are surpassing my expectations every day. So someone's going to get an annual subscription to Benzinga Pro for free. 2 people are. And then I don't know, like if you guys get to like, I don't know, like 1,000 likes, maybe like 1,000 likes, maybe we'll go on Amazon. We'll pick out a rat suit. It's weird that you guys want me to wear a rat suit. I don't get the rat thing. And maybe I'll wear it on Friday. I don't know. So that's an option. But at any rate, I'm Neil Hamilton. My co-host today has been Aaron Bree. Our guest today was Brad from tradinggrounds.live. Thank you, as always, for tuning in, and I will see you tomorrow. Happy trading.